unmute myself.
No problem. Please start.
Thank you. Sir. Thank you so much. So good evening, everyone. I believe we are little running short of time, but I will try to go a little fast. So please give me apologies for that. So first, with the indirect taxes in GST, I would like to mention that the proposed changes in the financial bill are notified clause by clause by the government through the notifications on a later date. And when these are notified, from that day, that particular clause shall be applicable. So, Ishu, can you please move to the next slide? So, with the definition of OIDR, I believe that is the major change in the indirect taxation this year. So that's why I have included this first. That is that in OIDR, basically, the person who is registered in India or outside India, if they are providing a service to Indian consumers, in that cases it shall be applicable. And it is very important for us to understand, because the definition of OIDR is not just exclusive definition, it is also inclusive definition, and it has a larger impact on the GST from the GST perspective to several of our clients, and I believe to many of us as well, so who are listening. So in such cases, when we see as of now the OIDR definition is creating a lot of litigation issues. It is not just in India. The same definition have been taken in Europe and many other countries, which is creating the litigation issues. So basically, OIDR have three conditions. If I simply put it that the service which is basically delivered through internet, the service which is involving any supply which is involving essentially automated and involving minimal human intervention, and the third is that it ensures that there is an absence of the service cannot be provided without the absence of information technology or electronic services. So in such cases, that is the existing condition. And it also includes that internet advertising or cloud services, etc., OID, data service or online digital content. So if I take a simple examples, let's say Netflix, or let's say Hotstar, or Steam, which is providing the gaming services. So many of these are or Google AdWords services or Google Cloud services. These are basically tasks. These are basically taking the they have to be considered as OIDR, and accordingly they have to be taxed. So with the recent change in the definition, essentially automated involving minimal human intervention have been done away, and now these conditions is not required. So if we will see that it will, because of the minimal human intervention and involving automation. Now, what do we term why these litigation issues were there? If we understand, that is the minimal human intervention is because how much human intervention is be considered for OIDR, or how much, let's say if a 10% minimal 10% human intervention is there, so if 20% will also qualify for minimal human intervention or not. So there is no such clarification for that purposes, and we cannot even compute the on the terms of percentage basis. So that is why the definition is welcomed, that it will end the litigation issues, but the scope now is much wider in our opinions. Issue, can you please move to next slide, please? So if you will see that if this is now have been removed, now what are the out of three, only two conditions need to be satisfied, and that is that service which is basically delivered through internet, and without such internet or electronic technology, that service cannot be supplied. And even the OIDR located outside India too, which are providing the service to India, so that shall be taxable. Even this lecture, if this webinar shall also be taxable if we are charging this for this webinar. Even this webinar shall be chargeable. So you can see that if any online lectures are being provided, or on any webinar or have been provided, or recording sessions or consultancy have been provided from outside India through the internet, to the registered or unregistered, all these shall cover under the OIDR now. So that is a very, very large impact, in my opinion. However, for the unregistered person, how the government shall track, that is another issue that we need to see that how these shall be taxed. So with this respect, a definition of non-taxable online recipient has also been changed with that, because unregistered persons were not clarified basically. So it was required a clarification, because NTR from received from basically, if a OIDR is service provided to the government agencies and they are registered under TDS registrations. So OIDR were not paying the taxes on forward charge mechanism. We will discuss that along with it. So in that cases, because they were considering that transaction as a forward charge mechanism, because for the reverse charge mechanism, because that is a registered entity. But these registered person were registered as only as a TDS located in taxable territory, and all the taxpayers which are registered only for TDS registration under clause 6 of section 24 shall be considered as TDS registered and shall be included in the unregistered person. So this have been more into the clarificatory in nature. Issue can be, yeah. So in such cases, now if you will see any supply of service from to the unregistered person, supplier of service, that is even OIDR is located outside India, shall be liable to pay forward charge on a forward charge mechanism. If the supplier is supplying the service to the recipient of to the registered person, in that cases the Indian taxpayer need to pay to the taxes on the reverse charge mechanism. But OIDR is not just applicable to the entities which are located outside India. It is also applicable to the entities which are located within India. So from that perspective, OIDR have a very, very large impact in my opinion. So issue, can we move to next, please? So now let's understand that there are certain changes with respect to high C sales or drop shipping, or let's say custom bonded warehouse sales. For that, let's first understand what is basically a high C sales. So if a supplier from outside India is supplying to the some goods to the let's say B company is providing, A is supplying to B, and B is located in India. So B is basically importing the products in India, and before the custom clearance, it is supplying it to C. Now the C shall file for the custom clearance within the India. Such sale was basically maybe taxed to India or not, maybe taxed to GST or not. So there was not a clarity before. And similarly, there was a custom bonded warehouse sales. Now, the third case is where, let's say, a USA client is ordering to me some for supply of goods. I do not have that goods. I ordered that goods from China and from Japan, and Japan is directly supplying these goods to USA. So in that cases, when the goods are directly supplied from Japan to USA, that is from non-taxable territory to non-taxable territory, that is from outside India to the outside India, the goods are supplied. In that cases, the goods are not basically taxed in India in GST, but in such cases, there were litigation issues going on, and there was then the government clarified through this budget of 2018, and which was notified on 1st February 2019, that such goods shall be considered as, such supplies shall be considered as no supply into the GST, which basically changed the whole transaction. Can we move to the next slide? Yeah. So high C sales, supply of warehouse goods, drop shipping were considered as a no supply. Now, when we say it no supply, it was inserted with effect from 1st February 2019. Now, the department start raising the demands for the previous period. That is from that for if we have made any supplies within 17-18 period or before the 1st February 2019, there were ongoing audits or assessments, and departments started raising demands. So in that cases, now this amendment have been brought that this shall be considered as retrospectively. This amendment shall be considered as retrospectively. That is from 1st July 2017, which in my opinion is a very welcome move. But in such cases, if we have already paid such taxes, refund for that taxes should not be allowed. In my opinion, that if the tax is not applicable, if the tax should not be paid, ideally refund should be given to the taxpayers. But that is how they have made the proposed change to the amended law. So now can we move to the, with respect to this, there was another clarification, there was another insertion of the amendment in the ITC, that earlier the credit of such no supply was allowed because it was not included in the definition of exempted supply, and accordingly it was not included in the section 17(3) definition of exempted, or neither in the definition of section 2 it was included, that the exempted supplies definition, it does not include no supply. So the credit for basically no supply of this high sea sales, warehouse sales, or drop shipping was allowed, and people were even trying to claim this refund for the purpose of, because the ITC is allowed, and accordingly in cases of without payment for the other details, they were taking the credit for the same as well. But in cases the ITC availed, now there have been a recent amendment that and ITC of the exempted goods, exempted supply. But in such cases, exempted supply, but what would happen for the previous supplies which we have made? So that is yet to be seen, because we may be facing demand notices from the department that earlier is also taxable, but yet it is yet to be seen. Issue, can we please go to next slide? So recently, there have been a lot of litigations with respect to CSR expenditure. Allowability of CSR expenditure has always been a question, and there have been wave of litigations on question of CSR expenditures, that whether the ITC is allowed or not, and several rulings have been there with respect to ITC on CSR expenditure, whether it is allowed for the furtherance of business or not. In my opinion, ideally it should have been, because it is obligatory in nature for as per the section 135 of the Companies Act. But with the recent amendment, the CSR expenditure on the entities, even if they are legal obligatory, the ITC of such expenditure is not allowed to the companies. Now, on one hand, they say that the CSR expenditure is mandatory, and on the other hand, it is making the cost higher on the basis of CSR expenditure, because the ITC is not allowed. However, for ITC for other block credits, wherever it is obligatory for an employer to incur the same, it is the credit is allowed. For example, insurance, if it is obligatory by an employer, it is allowed. But however, in this case, CSR, it have been amended accordingly, and there will be a question that whether the ITC of CSR shall be allowed or not. But now it have been put to rest that ITC of CSR shall not be allowed. But yet to be seen that whether we face the demands for previous period or not. So we can move to next. So now there have been a recent change with respect to composition scheme as well. That is that if any person who is supplying the goods through the e-commerce, earlier they were not able to make the supply through e-commerce operator, because there was a condition for the composition scheme. But now for supplying the goods through e-commerce operator have been put away, and now the person who are engaged through e-commerce operator shall be eligible to composition scheme. So person who want to supply the goods through e-commerce, they can opt for composition scheme even now. But we need to note that that intrastate supply or interstate supply, only intrastate supply is allowed within a state. That means interstate is not allowed, because that is also an additional condition to the composition, and which is yet to be there. It is not done away. So can we move to the next slide, please? So e-commerce operators are liable to pay the amount of penalties now to the 10,000 or the tax amount, whichever is computed on such supply, in case the e-commerce operator allow the supply of unregistered persons through his website who are required to be registered, or they make intrastate supply, however they are only allowed for intrastate, or they furnish incorrect details in GSTR 8 through it by a person exempted from obtaining a registration. So in that cases, e-commerce operator shall be liable to pay the tax amount on which is computed on their supply, which is supposed to be there. So I think it is quite harsh on the e-commerce operators as compared to the penalties. If we see the penalties, can we please move to the next? So this is a very welcome move. I think this is more of a clarificatory in nature, because that earlier the section 24 basically, which mandates the registration in several of the cases like interstate supply or e-commerce operator or OIDR, even 1 rupee sale shall become taxable from that. It already contains that, notwithstanding anything contained to section 22. So section 24 only overrides section 22, and there have been reservations by the department, the consultancy firms, that even in that cases we were getting the lot of taxpayers were getting themselves registered, because just to save this that they should be registered just because there should not be any penalties or liabilities at the later part. So that is why now there have been a very welcome move from the government, that notwithstanding anything contained in the section 22 or section 24, if the person is exclusively engaged in exempted supplies or which are not liable to tax, so they are not liable to be registered. So that means, in a nutshell, if I say, even if you're dealing 100% in exempted goods, and even if reverse charge is applicable, you are not required to get yourself registered, and you are not liable to pay the reverse charge and take the registration. And this is clarificatory, more of a clarificatory, and this have been inserted with effect from 1st July 2017. So if any demand have already been raised, so we can reply with the notice for the same, with the taking the help from this amendment. So Ishu, can we please move to slide? Yeah, so I will give a quick view of this, that earlier there was from 1st July 2017, there was a place of supply was amended. That place of supply was that in cases both the parties are registered, the supplier who is supplying the goods to the registered person, the place of supply shall be to the irrespective where the goods are supplied, the place of supply shall be the registered person's entity's place of supply, location of supplier, but location of recipient, it shall be the location of recipient. But in cases from 1st February 2019, it have been changed that in cases the goods have been supplied to outside India, in that cases place of supply shall fall outside India, and accordingly the transportation of goods shall fall outside India. But the even though the registered person is located in India and the supplier is also located in India. For example, let's say if I am registered in Haryana, I have a client who is also registered in Haryana, Now both are registered in Haryana, but I am transporting the goods from Haryana to, let's say, US. So in that cases, now with this provision, the credit was basically transferred to the next to the US place. But now there have been lot of issues with this, because how the credit shall be allotted. So now it have been again amended that the place of supply shall be again for the registered person. So irrespective of destination of goods, the place of supply after this amendment shall again become to the same thing, that the place of supply of registered person shall be there. So we can move to the next slide. So there have been a change with the respect of GST refunds, which is very, very important. I think that the 90% of the provisional credit is earlier was not allowed. A provisional credit provisional refund was not allowed from the provisional credit, that is RFD 04 for basically is issued for the zero rated supplies. If I say zero rated supply, that means basically exempted goods or export with payment or without payment, or basically supply to SEZ with payment or without payment. So 90% of the total amount is issued through provisional refund, that is RFD 04. But in such cases, the currently provision ITC was not allowed for the provisional refund, provisional ITC. But now it have been changed that it shall allow the credit for provisional ITC as well, provisionally accepted ITC. But when this section shall be notified, that is yet to be seen, because the credit for provisional ITC which we have taken, and we want to claim it as a refund as well in our refund application. So if this comes as sooner, if it comes sooner, in that cases for the previous year refunds which we have filed, we can claim it for the provisional ITC for the previous years as well. And in this section 56, earlier the interest calculation was 60 days from the date of application, but now it shall change to the government shall basically provide the manner of calculation, the ITC. Issue we can move to so now the government has basically decriminalized the certain offenses and increased the threshold from 1 crore to 2 crore, except for the offenses issued of the invoices, supply of goods or services without that is basically fake invoicing if it have been issued. So in that cases, the government has not decriminalized, but for the other expenses, other taxes amounts, the prosecution limit have been increased from 1 crore to 2 crore. And to reduce the compounding amount from the present range from 50% to 150%, it have been decreased to from the range from 25% to 100%. So now we are through with the indirect taxes issue. It is over to you.
Right. I think we have some questions. So we'll just quickly jump to the question as we are nearing the end of